I'm Pat Keon, a senior research analyst with Thomson Reuters Lipper. I'm here to speak to you about fund flows for the week ended Wednesday, April 19th. Let's start by taking a quick look at that week's market activity. Both the Dow Jones Industrial Average and the S&P 500 had retreated slightly on the week. The Dow was off 0.9% and the S&P 500 was down 0.3%. The markets were hurt by some disappointing earnings announcements, as well as the geopolitical crisis around the globe, as well as a little decline in oil prices near the end of the week as well. On the earnings front, IBM, Johnson & Johnson, Goldman Sachs, and Wells Fargo all released disappointing earnings during the week that hurt the market. On the oil front, a U.S. government report forecasted the highest shale oil output in more than 2 years in the coming months, which depressed oil prices and hurt energy stocks. And lastly, the geopolitical crisis that the U.S. is facing right now, both with North Korea and Syria, seem to weigh daily as an anchor on the markets. All right, let's turn our attention back now to the fund flows activity for the week. We'll start by taking a quick look at our fund macro groups. For the week, equity mutual funds had outflows of $1.275 billion. Taxable bond funds took in $830 million in net new money. Muni bond funds had net inflows of $194 million, and money market funds saw approximately $11.3 billion leave their coffers. Okay, let's move on and take a closer look at each of the fund macro groups now. We'll start by taking a look at our equity groups, starting with the mutual funds. The $1.275 billion in net outflows was the 9th outflow in 10 weeks for the group. Once again this week, we see that domestic equity funds were responsible for the lion's share of the net outflows, as they saw about $1.2 billion leave their coffers. For the year to date, domestic equity has seen outflows of $14 billion, while non-domestic equity has managed to take in net new money of approximately $8.6 billion. Let's move on to our equity ETF group now. The group had net inflows last week of $2.1 billion. It's the second straight weekly inflow for the group. Year to date, equity ETFs have taken in $85.6 billion in net new money. The major contributors to last week's inflows was the iShares Core MSCI EFA product, which had about $1 billion in net inflows, as well as the Spider Gold product, which had net inflows of roughly $755 million. On the outflow side, we see the Spider S&P 500 having about $1.3 billion leave their coffers. Let's move on to our next set of funds now, taxable bond mutual funds. Net inflows for this group last week as well. They took in $830 million. It was the fourth weekly inflow in the last 5 weeks. This is another group having a good year so far. They've had net inflows of just over $61 billion for the year to date. The big contributors last week to the inflows were the Core Plus Bond Funds Group and the Core Bond Funds Group, which took in roughly $940 million and $280 million respectively. Moving on now, we'll take a closer look at our taxable bond ETF group. Net inflows here as well. $677 million in net new money last week, representing the 5th straight weekly inflow. Once again, a good year for this group as well. For the year to date, they are currently up $34.6 billion. The major contributors to last week's net new money coming in was the iShares iBox investment grade product and the iShares JPM USD emerging market bond fund product, which both took in just in the $200 million range in net new money. On the sell side, we see the iShares iBox high yield corporate product with net outflows of just over $200 million. Moving on now, we'll take a look at our Muni Bond Fund Group. Net inflows here as well last week, taking in $194 million in net new money. It was the 4th week in 5 of net inflows. This group has also had net inflows for the year to date of just less than $7 billion. The big contributor last week to the inflows was the high yield muni debt category, which had roughly $220 million in net new money come in. And for outflows last week, we see short muni debt funds had about $180 million leave. Our last group to take a look at is money market funds. Big outflows from the group last week. They saw $11.3 billion leave their coffers. It was the fifth outflow in the last 6 weeks for the group, and they've taken a hit so far for the year to date. They've had net outflows just short of $79 billion. The biggest contributors to last week's outflows were the institutional U.S. government money market group and the money market funds group. They've had outflows of $4.2 billion and $1.9 billion, respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please feel free to look at our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.